We are inside of a major hurricane. There's no doubt about it. It isn't just the death of the dollar, it's the death of the entire financial, monetary, and social system. And that's huge. And they need as many people as possible to keep their wealth in there, because when we go to those CBDCs, you will have no choice if that is your only form of money. And they have said they can keep their finger on that button 24/7, which means they can also cut you off. I mean, it really is simple. You got to have this, and it's got to be outside of the system. It's real money.
Lynette Zang has been the Chief Market Analyst at ITM Trading since 2002, where she has contributed her expertise in various financial and market-related issues. In this video, Lynette Zang predicts a financial collapse, with CBDC dominance leading to constant control by authorities. Meanwhile, she advocates holding precious metals for wealth protection. The emergence of CBDCs brings both immense potential and profound risks. The more functionality these digital currencies possess, the greater the political pressures central banks could face, threatening their independence, credibility, and legitimacy. Gold prices kept above $1,950 on July 18, remaining firm on a safe haven of demand. Inflation cooling off in the U.S. contributed to the recent surge in gold prices. This positive trend in prices was further emphasized by its best weekly gain since April. Lynette Zang highlights that gold competes with traditional currencies and could pose competition to CBDCs. Last Friday, the Russian embassy in Kenya declared that the BRICS countries are planning to introduce a new trading currency, which will be backed by gold. The news was confirmed by RT, the Russian state-controlled TV network. The announcement adds further momentum to the much-discussed de-dollarization movement that has intensified since the Western sanctions against Russia for its invasion of Ukraine. However, as the BRICS Bank confirmed days before Russia's announcement, the creation of a common currency is more of a medium to long-term ambition, and the bank doesn't have any immediate plans for the group to create a common currency. Lynette Zang finds the Zimbabwe gold-backed CBDC test intriguing, dispelling the misconception that significant gold reserves are required. Only the gold's price relative to the currency is key. According to a report, the Reserve Bank of Zimbabwe has commenced trials, or the dry run test, for the viability of launching a gold-backed digital currency. Nelson Mapanga, the Director of Economic Research at the central bank, reportedly said the digital currency will act as an alternative to foreign currency. The gold market is now net long by 115,318 contracts, and bullish speculative positioning has pushed it to its highest level since early March 2022. During the survey period, gold prices rallied to a 7-week high, testing resistance around $1,980 an ounce. We will now bring you clips of Lynette Zang from her recent interview with Stansberry Research. Before we proceed further in this video, please make sure to subscribe our channel and click the bell icon to stay updated.
What gold does is it competes with dollars or euros or yen or anything else, so it would be competition to the CBDCs. Right. There are opportunities, but you need to be in the right place at the right time, holding the right asset so that you can have that wealth transfer your way for a change. And if you have CBDCs, they've already told us, you have to, and watch what they're doing, right? They are showing us, they aren't just telling us. They want the masses, they want the public to have nothing. But wealth never disappears, it just shifts location. So if the 1% own even more than they own right now, and you're having to rent everything. And this announcement was made from the Russian embassy, I think it was in Kenya, but it was somewhere in Africa.
Yes.
And then RT picked up on it and ran as if it was a given. Now, when I did my digging into it, what the BRICS nations, what the BRICS Bank is actually saying is that they don't have plans to back any currency, or certainly the BRICS currency, with gold at this point. That all they're talking about is enabling all of its members to use their own local currency to transact with each other. Now, Russia has announced that they're not going to be attending this BRICS summit next month. So it's going to be really kind of interesting with them backing out. And I understand, why they did with the Ukraine war and not wanting to get the whole world involved and thinking that they're going to do it. But I personally, ultimately, yes. And I think a more interesting story is actually what's happening in Zimbabwe, because that's where the test of a gold-backed CBDC is taking place at the moment. But no, I don't think they can do it. Actually, that's like a misconception of a lot of people. Like, well, they can't back a currency with gold because there's not enough gold. Well, what really matters is the price of the gold in terms of that currency. And the whole point of gold being a stabilizing influence is because of its rarity and its broad-based use. So you don't actually really need a tremendous amount of gold in order to back a currency. It would just be how it was valued in terms of that currency. So we will see a gold backing again, because they're going to have to do it in order to get confidence of the population to use the currency, which is what makes what's going on in Zimbabwe so interesting, because they're coming out, they're in the test phase right now to see acceptance of a gold-backed CBDC, except that at least at this point, I have not been able to find where in their documentation they're saying that CBDC will actually be convertible into gold. And until a currency is actually convertible, how do you know the gold is there? I mean, it's kind of like a crapshoot. So it's really interesting for me to see how this is going to be accepted there. And I'm certain, I am 100% certain, every single central bank is watching this.
The dollar has been the world's principal reserve currency since the end of World War II and is the most widely used currency for international trade. Meanwhile, Lynette expresses her conviction that the US dollar will lose its reserve currency status, and while she doesn't believe any single country will take over that role except for SDR. The SDR came into being because the international supply of the dollar and gold was not enough to support the rate of growth of trade and financial transactions. SDRs are global reserve currency and could replace the dollar when we talk about international transactions. There's a substantial amount of commercial real estate in the banking system. A large part of it is in smaller banks. It's well distributed, Powell told reporters. We do expect that there will be losses, but there will be banks that have concentrations, and those banks will experience larger losses. So we're well aware of that. We're monitoring it carefully. It feels like something that will be around for some time as opposed to something that will suddenly hit and work its way in a systemic risk. Lynette believes the move towards digital accounts is a setup for introducing CBDCs, while the real issue is the drastic loss of currency purchasing power. The Federal Reserve is likely to raise policy rates again this week. But that could mark the final hike of this cycle and set the stage for a weaker US dollar over our forecast horizon. We think the euro and other currencies are likely to strengthen against the greenback. Gold should also benefit from a depreciating dollar. Let's get back to interview.
The days of the dollar being the world reserve currency are fast coming to a close. And that move actually didn't start even, and it started back in 2002, because that was when the Federal Reserve first had to buy U.S. debt, which is an indication that the world was either saturated in it or they weren't able or wanting is probably a better word, to buy enough of the U.S. debt that we were trying to shove down everybody's throats. So yeah, there is absolutely zero doubt in my mind that the U.S. dollar is losing its position as the world reserve currency. But I don't really think that it will be a BRICS currency or China or any individual country or smaller group of countries that would take over that role. I continue to believe that it will be the SDR, the special drawing rights of the Federal Reserve, of the International Monetary Fund, because there are no limitations. That's a basket of currencies. So for a number of reasons. Number one, it's been around since 1969, and everybody has now quite a bit of it. Between 2009 and then, a couple of years ago, when the IMF went in and gave everybody like a ton of them, of SDRs.
Right.
So, plus they have the substitution fund, so that it'd be easy to convert any dollar-denominated assets into SDR-denominated assets, therefore establishing the SDR as the largest currency in the world with the most liquid pool of assets, because they're taking everything that's currently dollar-denominated and converting it into SDRs. So between being able to put every currency in the world into the SDR, so you have a global currency, and then translate that easily into a local currency, that's the one that just makes the most sense to me. This banking crisis is not over. Maybe they've been able to paper over it, and so everybody is calm, and you have consumer confidence going up and all of this other kind of garbage, but it's built on a house of lies. And that's what Yellen's job is, and that's what Powell's job is. That's what all the central banks, all the faces, their job is to keep the public calm and keep them inside of the system, because it is easier to steal wealth that way. You know, if you recall, during the issues that we were having in 2020, they said, how much easier would it be if everybody had an account and we could push a button and just put money in there? So that's what they're setting up for, is to absolutely enable pushing the CBDCs onto the population. And they're going to try and keep it as close to normal as possible so that we can accept it and start to use it. And it's not using the money that, it's just, well, they'll do. It's not using the money that they're going to push into it, which will, again, here's the thing, Daniela, and nobody talks about this, but we have virtually no purchasing power left in the currency. Officially, you got 3 cents left. And the biggest tool to regulate that are interest rates. And every time the Fed tries to raise interest rates, it creates the next crisis. So why isn't anybody talking about, what happens when we do get to zero?
As the financial landscape continues to evolve with the emergence of CBDCs and potential shifts in the global reserve currency, uncertainties looms. Gold's enduring appeal as a safe haven asset persists amidst inflationary pressures and the weakening dollar. How will these developments shape the future of international trade and the global economy? Share your thoughts in comments section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.